What's up, guys? Welcome to the Passive Income Seeker, where I aim to provide ways for you to achieve financial independence through passive income. After doing some research, my preferred method will come from investing in the stock market, more specifically into dividend-paying stocks and ETFs. As a beginner investor, I wanted to document my investing journey with like-minded individuals who might need some added motivation along the way. The idea is that my videos will resonate with those who are just starting out with investing or might be feeling a bit discouraged about having a smaller portfolio. Personally, this was one of the biggest factors that kept me from investing sooner, and I want to show others that even if you're starting with smaller deposits, the consistency is what makes a difference in the long run. I'll be providing updates on my portfolio, including positions that I'm buying into and selling out of, while also explaining why I'm making these decisions. While on the investing sidelines, I've been doing countless research and developing an investment plan that I feel works for me. I understand that within finances, people will always give their 2 cents, but what I've learned is that everybody has different objectives for their investments. With that being said, I'll share the positions that I recently started within my portfolio and why I chose these positions to help reach my goals. So I'm going to go ahead and list the tickers in my portfolio in alphabetical order, starting with ABR, ARCC, DIVO, DGRW, IBIT, Maine, NEP, PFLT, SCHG, SOFI, SPLG, and for my 2 crypto holdings, BTC and ETH. All right, so getting into the first holding, we have Arbor Realty Trust, ticker symbol ABR. Arbor is considered within the financial sector. It's a mortgage REIT. I'll drop another video basically explaining what that means and just going into a little bit more detail about Arbor. For now, we'll just get into some of the statistics within my portfolio. So as far as shares, I have 1.83 shares, which comes out to $23.74. For my average cost, I'm purchasing right around $12.85. My total gain is 0.94%, which comes out to a whopping 22 cents. My annual dividends that I can expect from what I'm holding right now would be $3.15. And just additionally on the right, there's some more statistics there. This screenshot is from Simply Safe Dividends. I know they have like a 2-week free trial, so it's pretty cool to check that out. So the dividend yield is 13.27%. Dividend safety score of 50, which is considered borderline safe. Dividend growth rate of 9%, so it's moving fairly quickly. The price as of right now is $12.96. Market cap is $2.44 billion, so it would be considered a mid cap. And the beta is 1.67, which is considered very high, so that basically indicates how volatile stock is. So we'll get right into the next stock. All right, for our second holding, we have Ares Capital Corporation, ticker symbol ARCC. Ares Capital is also in the financial sector. This is a BDC. BDC stands for Business Development Company, and I'll go into a lot more detail on what that means, what that all entails when I drop my video for Ares Capital. For now, we'll go into the shares, which is 1.01, which comes out to $20.89. My average cost is $20.15, which gives me a total gain of 2.76%, which comes out to 56 cents. And the dividends that I can expect from the holdings that I have right now in Ares Capital would be $1.92. So the dividend yield for Ares Capital is 9.33%. Dividend safety score of 59, which is borderline safe. So we're getting a little higher in terms of how safe our dividends are. Dividend growth rate of 0%. So not too much growth there, just kind of steady income. The price is at $20.57. Market cap $12.5 billion, which is a large cap. And Ares is actually one of, if not the biggest BDC that's traded. And for beta, we have 0.71, which means that it's pretty safe. Not too much price fluctuation. Let's get into the next one. So next we have the Wisdom Tree Dividend Growth Fund, ticker symbol DGRW. This is a dividend ETF. Share size, we have 0.154, which comes out to $11.53. My average cost on this is $75.33. My total gain on this is negative, so it's negative 0.63%, which means I am down 7 cents. My annual dividends for right now is 16 cents. The dividend yield is 1.64%. Dividend growth is negative 6%. Price is $74.86. This too is a large cap at 12.5 billion market cap, and the beta is average on this 0.87. All right, so next we have our Amplified Dividend Income ETF, ticker symbol DIVO. This is a covered call ETF, and again, I will definitely go into more detail on what that means when I drop the video for DIVO. So shares, I have 0.34 shares, which comes out to $13.03. My average cost for DIVO is $38.41. Total gain, 0.94%. Comes out to 22% gain, so I'm up on that. Annual dividends as of right now is 50 cents. Dividend yield is 4.51%, so fairly high, pretty good dividend yield on that one. Dividend safety score actually isn't rated on this one. Dividend growth at 0%, so pretty slow. A lot of people don't get into DIVO for the growth. It's more so an income play. So all about those dividends. Price is $38.55. Market cap, this is mid cap, so 3.13 billion, and the beta is 0.58, which would be considered low. All right, so getting right into my first non-dividend paying stock within my portfolio. This is iShares Bitcoin Trust, ticker symbol IBIT. So the sector here is Bitcoin. This is an ETF. Shares 0.34, which comes out to $13.13. My average cost is $38.77, which gives me a total gain of 2.84% or 37 cents. And again, this is not a dividend paying stock, so the annual dividends on this is zero. The current price as of right now is $39.33. Market cap is 19 billion, so this is large cap. Beta on this is 0.91, which is considered average. Getting right into the next one. Now we're getting back to our dividend paying stocks. So I have Main Street Capital Corporation, ticker symbol MAIN. This is also in the financial sector, a BDC as well. Share size, I have 0.32 shares, which comes out to $14.99. Average cost is $46.19. Total gain, I'm at 2.40%, so I'm up on this. I'm up 35 cents. Annual dividends on this would be $1.05. Getting into those statistics, the dividend yield on this is 6.04%, so another high yielder. The dividend safety score on this is 62, so that's safe, so feel good about that. Dividend growth is 2.1%, which is very slow. Again, a lot of people get into Main Street Capital for the income, and it is a monthly dividend payer, so that's nice. The price is $47.67 as of right now. Market cap is 4.05 billion, which is considered a mid cap, and the beta is 0.60, which is considered low. Next up, we have Next Era Energy Partners, ticker symbol NEP. This is within the energy sector. Share size 1.05, comes out to $31.02. Average cost $27.94, which gives me a total gain of 4.86%, which comes out to $1.44. The annual dividends I can expect from this holding would be $1.05. And again, that dividend yield is pretty high, actually very high at 11.60%. Dividend safety score of 42, so that's considered borderline safe. Dividend growth rate of 11%, so it's growing pretty fast. Price is, as of right now, $30.35. Market cap, 2.74 billion, which is considered mid cap. And the beta on this is 1.29, which is pretty high. So it's a fairly volatile stock as of right now. Now we have Pennant Park Floating Rate Capital, ticker symbol PFLT, another BDC. So sector is financials. Shares 1.13, which comes out to $12.72. Average cost on this is $11.26. Total gain, I'm down on this. So I am down 0.33%, which comes out to 33 cents. Annual dividends on this is $1.28. The dividend yield is 10.83%, so another high yielder. Dividend safety score is 23, so that's deemed unsafe. And you might be wondering why I would build a position in something that's unsafe. So we will get into that when I drop my video on PFLT. Dividend growth is 2.5%, which is considered very slow. The price is $11.36. Market cap is 698 million, which is considered small cap. The beta is 0.79, which is considered low. Next up, we have the Schwab Large Cap Growth ETF, ticker symbol SCHG. So since this is a growth ETF, this will be a low dividend yield. Share size, we have 0.07, which comes out to $7.03. My average cost on this is $92.09, which gives me a total gain of 0.39%, so a crazy 7 cents. And the annual dividends on this as of right now is 2 cents. The dividend yield is a 0.33%. No dividend safety score on this one. Dividend growth rate, as you would expect, is fast because it is a growth ETF. So this is at 11%. The price is $92.48 as of right now. Market cap is 26.8 billion. Again, this is a large cap ETF. Beta is 1.24, which is considered high. Again, it's growth. So there are a lot of tech plays in there, which lead to that fairly high beta score. So super volatile, fairly volatile. So here we have another non-dividend paying stock in SOFI Technologies. The sector for SOFI is financial / technology. They do a lot within the tech space, but SOFI is a bank, so it does fall under that financials with a bit of tech exposure as well. So shares, I have 1.12 shares, which comes out to $8.25. Average cost is $7.17, which leaves me a total gain of 3.16%, which comes out to 25 cents. And the annual dividends on this is going to be $0 because, again, it is not a dividend paying stock. So the price for this is $7.89 as of right now. It is a mid-cap company, so market cap is 8.2 billion. The beta on this is 2.62, which is very high. So I'm going to double down on saying that SCHG is fairly high with its beta score, and SOFI will give that pretty high or very high, which means it is a super volatile stock. So to round up the dividend stocks within my portfolio, we have SPDR S&P 500 ETF, which is from State Street, ticker symbol SPLG. This is an ETF which tracks the S&P 500. So ideally, this will be my cornerstone holding. So I will hold a large portion of my portfolio in something like SPLG just to kind of have that S&P 500 exposure, relatively safe. I know what I'm going to get when I'm investing in to the S&P 500 or something that tracks that particular index. So my share size on this one as of right now is 0.21, which comes out to $13.03. Average cost is $60.92, which leaves me with a total gain of 0.23%, which comes out to 3 cents. My annual dividends comes out to 12 cents. Dividend yield of 1.35%. The dividend safety score is actually unrated on SPLG. Dividend growth is 6%, which is average, so pretty solid. Price is $61.08 as of today. Market cap 33.6 billion, large cap company, and a beta score of 1, which comes out to an average beta score. So I just also want to run through some of my crypto holdings. Well, my only 2 crypto holdings. So first up, I have Bitcoin, ticker symbol BTC. Sector is obviously cryptocurrency. So my shares as of right now is 0.00004383. So that comes out to $3.04. Average cost of I'm buying in when the price is at $68,674.42. Total gain, I'm up, so 0.96%, which comes out to 3 cents. And for my second crypto holding, I am holding Ethereum, ticker symbol ETH, sector, also cryptocurrency. Shares on this is 0.000829, comes out to $2.84. Average cost $3,630.88. I'm down on this position, 5.65%, which comes out to 17 cents. And again, both of those do not pay me a dividend because these are not dividend paying stocks. These are cryptocurrency assets that I'm in. So those are all the holdings as of right now for the passive income seeker portfolio. We will just go over some stats right now. So our dividend yield is at 7.75%. Our total gain is right around 2.92%, which equates to $4.84. The annual dividend income is at $12 right now, and our yield on cost is 7.31%. And in my next video, I'm going to go over why I want to pay close attention to that yield on cost and why I think every dividend investor should pay attention to yield on cost as opposed to the yield. The dividend yield obviously is important, but when we talk about dividend growth, I really feel like the yield on cost is something that's super underrated metric that a lot of people tend to look over. So my next video, I'll be talking about that. I'll also be dropping individual videos for each holding that I have, and I will go more in detail about why I have those holdings and how I plan to use those to retire early. See you guys in the next one. Peace.